The Dynamic Asset Allocation funds invest into a mixture of equity and debt instruments. However, the proportion of equity and debt varies with respect to market conditions, thereby providing optimal returns with lower risk. In a balanced or a hybrid fund, the proportion of equity and debt is much smaller or a much narrower range, whereas in dynamic asset allocation, the range is much higher, thereby providing flexibility to the fund manager to optimally mix between equity and debt at market times. The Dynamic Asset Allocation Fund invests into a suitable mixture of equity and debt. The equity investments in the fund provide ample opportunity for the investors to ride the market waves, whereas the debt investment provides diversification and stable returns, thereby limiting downside. The parameter base of the Dynamic Asset Allocation Fund also helps investors or also helps the fund managers to choose a right mix of equity and debt at market times, thereby providing returns as well as limiting the downside. The Dynamic Asset Allocation Fund has a parameter-based investment approach which helps the fund manager reduce or increase the equity portion, thereby eliminating the investor to use his own manual intervention while choosing funds. Every investor would prefer to buy low and sell high. However, this strategy is very difficult to implement, and especially during volatile times. By investing in the Dynamic Asset Allocation Fund, the investor gets to make the most of the volatility as the fund effectively rebalances, thereby managing the volatile times. The Dynamic Advantage Fund is a dynamic asset allocation fund that has a wide range of investments from 20% equity to 80% equity, as well as 20% debt to 80% debt. The fund will proactively invest into a mix of equity and debt depending upon market conditions, thereby providing adequate security to the investors as well as participate in the growth of the economy. The fund is mostly suited for investors who are looking for capital appreciation in the medium to long term with a moderate risk appetite. The fund offers ample flexibility for the fund manager to move from equity to debt during volatile times. It is ideally suited for investors who find it difficult to assess the market conditions and manually switch their portfolios from equity and debt. When compared to other mutual funds, the Tata AIA, the Dynamic Advantage Fund, has an additional advantage of insurance cover for its policyholders. The investment team will look at the lead market indicators like price to earnings, yield gap, price to book, and other leading indicators to identify the right time to make switches from equity and debt or vice versa. Having said that, the investment philosophy of Tata AIA remains consistent with regards to a long-term investment philosophy, a bottoms-up approach, and a philosophy of delivering consistent and superior market returns. Tata AIA's well-defined investment approach as well as a consistent team has resulted in superior fund performance over years. This is also reflected in the Morningstar ratings as of February 23, where 99% of Tata AIA funds have been rated 4 or 5 star by Morningstar in the 5-year category compared to an industry average of only 30%. This, coupled with superior and flexible asset allocation strategy of the fund, would offer retail investors a strong equity performance as well as limit the downside during volatile times. By investing in the Dynamic Advantage Fund, the investors get, first, to participate in the Indian equity market performance, second, protecting their downside in volatile times by proactive asset allocation to fixed income which has stable returns, and third, to continue partnering with Tata AIA which has been delivering superior fund performance over years.